Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, June 17th. Hope you guys having a great day so far. We do got some important economic data, and we'll start with housing data today. We got the housing starts for the month of May. So in April, we had a five-year low of 934,000 annualized units. Forecast for May was calling for a big uptick to 1.13 million, but that was a little bit out of the reach, and it came in at 974,000 annualized units. Building permits also were expected an uptick. We had 1.07 million in the month of May, and forecasts were calling for 1.25, and came in pretty close, 1.22 million. So much closer building permits, which will be future housing starts versus the housing starts. But again, things are just getting back on track. We saw a nice big uptick on the home builders index, which obviously is the confidence level. For those of you who don't know. We saw a nice big uptick. It was like 21 points, bringing us near the happy level. And let's move on. Let's go over to headline news. Stocks are a little mixed today. They've been going upwards, but not always selling on their highs. So there is some uncertainty in the markets. Dow is slightly in the negative right now, whereas Nasdaq and S&P currently are in positive territory. Fed Chair is also having his second day of testimony, this time before the House. And like yesterday, the stocks and bonds were moving up and down as he was speaking. So taking almost every word for almost hanging on to every single word that he was saying yesterday. So you could really kind of see it when you're watching him and watching the stock and bond market. It was pretty insane watching how that goes back and forth. Investors are kind of acting like a little chameleon. They're kind of looking at the rear view look for a possible movement in either direction for stocks and bonds, where they've been kind of correlating. So what have been saying is money's going from either bond direction or the mortgage back, or I'm sorry, into the stock area. And what's going on is that they are trying to be optimistic. They're trying to be bullish, but they're hoping for a V recovery, and so there are seeing some positive movements. Retail sales came out pretty positive. We have the possible that Dexamethasone or whatever it was, that one drug that came out for the coronavirus. So they're feeling a little optimistic in those scenarios. But on the other hand, they are seeing upticks in like several states where it's rising, coronavirus is rising. Also, China is also having another upsurge in the coronavirus as well. So again, these are, then we had comments by uh, Fed Chair Powell yesterday saying that things probably won't be like a V, indicate that it probably won't be this V curve that they're hoping for. And so if they kind of feel that we won't get that V, we'll probably see stock pull back and that money go back into mortgage-backed securities. So that's why you're getting a lot of uncertainty. And to kind of show that uncertainty here, here's a look at the bond market. You see these big swings here, which we had highs almost coming back to where we were the previous day on Monday, and then lows even dropping down towards the 25-day moving average. Same thing. We stopped near where we started, about 5 basis points from where we started, but about 14 basis points lower than the previous day. So we had pricing for the worst yesterday. Today we're down about 2 basis points. So this is where we started a little bit higher today, but this is where we ended. And from this point, we're down about 2 basis points. And as you can see, we're coming again close to the 25-day moving average, but yet we're still trying to break down above the. I'm sorry, this is a 50-day moving average, and this is 25. So trying to break above the 25-day moving average here as well. And then we got yields. Oops, sorry about that. Yields are still up there, but again, they're kind of coming down here. And as you can see here, we're just under 0.75 right now. And this is really closed. We started a little bit lower, and we have dropped a little bit further down as well. And we got this support here level right just above the 25-day moving average. So we got almost like a triple level of support, but they're kind of working its way down as well. So as you can see, it's way off of its highs. It was way up here. So this could be indicator that it could be weakening a little bit and help push it down a little bit further, as we've kind of seen these before, where they've kind of weakened and kind of pulled back. Kind of that's where the momentum kind of shifted towards. So long term, I think we could be okay in terms of mortgage rates, but this uncertainty, again, I think at some point the investors are going to see it may not be quite a V-shaped, maybe closer to a U-shaped recovery here, as a lot of businesses are not are going to be permanently closed, and that's more job losses that's out there. So we need to create new industries and create more jobs and figure those things out. So in any case, so right today, I would say mortgage-backed securities or mortgage rates should remain about the same as what we saw yesterday, even though we had a lot of fluctuation. But by the time the West Coast here got the pricing, we should be about the same as what we left off yesterday on that. Okay, if you guys are in California looking to buy a refinance, please reach out. Love to be able to talk to you a little bit about your scenario and how we can help you guys out. You can either direct message me or email me. It would be the two best ways to connect, and we'll definitely make time and talk to you guys about how we can help you guys out if there's any solutions we can provide. You guys have a great rest of your day. Thanks so much for watching this video, and we'll see you in tomorrow's video. Bye-bye.